Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage. He was identifying winning stocks with massive uptrends, like Riot Blockchain before it shot up 10,000%, Digital Turbine before it shot up 789%, Overstock.com before it shot up 1,000%. This power gauge comes from the legendary Mark Chaikin. Right now, you can get a free in-depth look at how his power gauge system works. A way to type in any of the 4,000 different tickers and see exactly where a stock is most likely to go next in any type of market. Simply go to chaikintrial.com for your free look. Again, that's chaikintrial.com.
Welcome to Making Money. This is Matt McCall. Thanks for joining me. It is August 9th, 2022. A beautiful Tuesday here in Nicaragua. We got a big show coming up. It's all about the big news from the weekend. They call it the Inflation Reduction Act, the IRA. How much inflation is it really going to reduct? And what does this mean for you and your investments? All that more coming up right now on Making Money. Again, this is Matt McCall. Thanks for joining me. It is the 9th of August, 2022. It is a beautiful, beautiful Tuesday morning here in Nicaragua. Looking outside, I wish you could see the other side here. The beautiful trees blowing in the wind, the sun shining. Granted, it's a bit of a rainy season down here, but boy, it's looking nice out there today. A nice day to get outside and enjoy the fresh air, if you will. But we got a lot to talk about today. We have the Inflation Reduction Act, and I'm going to break that down because, I did a lot of reading over the weekend of exactly what is in this bill. Mind you, it's 755 pages, so I did not read that dribble, but I did get a lot of insights from very smart people that did read a lot of it. And then I'm going to dive into the one sector. It's a niche sector that wasn't covered too much in this, in the analysis of it, but it's going to be getting quite a bit of money for the size of it. There's been a lot of good news about it. I've talked about it in the past a little bit, but that sector I'm going to talk about and name some names. A couple ETFs, 4 stocks I like. Lot to dive into, folks. But first, I want to take a look at the markets. And there's something going on in the charts here that I think is really important that we want to look at. And we're going to take a look at the S&P 500 here, the SPY. This is the ETF that tracks the S&P 500. As you can see, this is really Tuesday morning down here in Nicaragua. It's down about 1 point, about 0.25% right now. The one level that I'm looking at right now is this high from June when we rallied up. We rallied up to around 417 on the SPYs. We got there yesterday, Monday intraday, and then sold off. The market opened up really big in the morning on the back of the Inflation Reduction Act. People got really excited that they passed some type of climate bill. According to some sources, the largest climate bill by any country ever in the world to fight climate change. So that was obviously cheered on, but we ended up closing down. And I got to tell you, I was sitting down here very early in the morning talking with a couple of my colleagues down here about the market. I said, boy, I don't feel good right now. Just today, not long term, just very short term. It just felt like this was a buy the rumor, sell the news. Now that the news was out, it was time to sell into this. And you saw that action in the market. And again, we're down just a very little bit this morning. We could end up big. We could end up down big. I don't know. But you can see here that we are up against this resistance line. And until we really break above there, we could have a little bit of a pullback. I would not be overly surprised. Now, let's flip to the NASDAQ real quick and look at the tech stock. And it's a little bit of a different chart. You can see here, their high of June on the QQQs, which tracks the NASDAQ 100, was around 315. We blew through that last week, but now we're pulling back to kind of test that. We're at 317, and the tech stocks are getting hit a bit harder, down about 0.9% this morning. So we're down around 318 or so. So we want to watch the 315 level. If not, it probably pulls back a little bit more. But ultimately, as long as it stays above the 50-day moving average, around 298, we still look good. So what I'm trying to say here, folks, is in the short term, and I'm talking very short term, we could have a little bit of pullback. Intermediate term, looking at weeks, I think we're still really in good shape. We could have some consolidation. And longer term, I still believe this is a great buying opportunity, especially for a lot of individual stocks. I've been saying that for months, and there's a lot of stocks that are up well above 50%, some up over 100% in just the last few weeks. So again, I think we had that pendulum swing to the side that was so oversold. Now we're starting to come back, and I believe that now is a really, really great buying opportunity for long-term investors. You got to have at least 3 to 5 years time horizon. What happens in the next 3 days, 3 weeks, or 3 months? I don't know. There's a lot of volatility out there and a lot of catalysts that can move the market one direction or other, whether it be over what's going on in Ukraine and Russia, whether it be with the Fed, whether it be with inflation, whether it be with jobs. There's a lot of things out there that can really come out of nowhere and spook this market. So, or really push it, propel it higher at the same time. You don't want to be overly aggressive in near term, but if you have a long-term outlook, I still believe it's a great, great opportunity. All right. So before we talk about the Inflation Reduction Act, I just want to give a big thank you to all the viewers. Our show last week, we interviewed Jim Rogers, a legendary investor. He was in Singapore. I was down in Florida. Did great. I think we're closing on 70,000 views. I really want to appreciate that. And again, remember to like, comment, subscribe to the channel, and share it with your friends and family that you think may be interested in it. Even if it gets them irritated, it's okay. Because, a lot of people watch the show, get irritated. But they keep watching it for some reason. It's like this masochist thing. I don't know what it is, but hey, keep doing it. Well, let's get into the crux of this before we get into the stocks that I like. The Inflation Reduction Act, sometimes called the IRA, depending, it's a bit confusing when it comes to investments. Some people are referring to like a tax and energy bill. It passed the Senate on Sunday. It started Saturday overnight, and God forbid the senators have to work a long night. Jeez Louise. It's passed 51-50. It was a long party lines, but Vice President Harris came in, broke the stalemate, so pushed it across 51-50. And now heads to the House on Friday when they get back from their summer recess, and then off to President Biden's desk, where it's expected to pass the House and expected to be signed by Biden. So it will go into law. The spending, hundreds and hundreds of billions of dollars, 755-page bill, as I mentioned earlier. It's focused on combating climate change, extending healthcare coverage, some other things with Medicare. And apparently they say that it's paid for by savings on prescription drugs and taxes on corporations. We'll see. Another big part of it is the IRS. I think 80,000 new IRS agents. This is concerning. And the people that I've spoke to down here in Nicaragua, a lot of expats, a lot of people from the U.S. Down here, and I'd say probably higher middle class, if not upper class, a lot of people down here. Ask them about what they think of the bill. And most people, I would say, tend to be concerned about the part of the IRS. Because the IRS, if you have that many more agents, they're probably not going to go after the corporations because they don't have the manpower, the intelligence to really take down a large corporation who have the best attorneys in the world. But they will go after guys and ladies like you and I who don't have the money to have the best attorneys in the world. And, because the tax laws are literally probably thousands of pages deep, who the hell knows? Like sometimes you don't dot an I and cross a T. I don't think anybody out there is, not anybody. There's people out there trying to be crooked. Majority of people aren't there trying to be crooked, but sometimes you just make honest mistakes. You forget things, and it may actually go in your favor sometimes. But the thing is that you get audited, then you got to pay all that damn money, even if you're right to do it. I mean, it's what they're trying to do is ridiculous. Here's a bit of something they maybe should consider up in DC. Why don't you take the tax code from this big down to this big? Get rid of the loopholes of the corporations and of the ultra wealthy. That's how you get more money coming in. Not hiring 80,000 schlubs to come work for the IRS. This is BS, man. This is if this is not the epitome of more big government, I don't know what is. It's ultimately scary to me. And I'm not a conspiracy theory guy when it comes to that stuff, but it's ultimately scary. And the other thing is, they call this the Inflation Reduction Act. This bill has nothing to do with inflation, and it's not going to reduce inflation one iota. It's complete BS again. Even Bernie Sanders, the socialist, he came out and said the so-called Inflation Reduction Act will, in fact, have a minimal impact on inflation. I mean, even the far left demigod over there, still. So when it comes to the bill, according again to the numbers, who knows what ends up happening? For climate change, more than $300 billion. Some of the stuff is farmers to help them reduce methane gases, EV tax credit extension, electric vehicles. They're going to launch a national climate bank. It would make investments into clean energy. Sure, what we need is a government dealing with more money and them being a bank, because that's like having your crooked cousin be the banker in Monopoly. That's exactly what the government is. That crooked banker, you wonder how they get so much damn money and they win Monopoly every time. Funny enough, this computer right now is on top of a Monopoly box. So I didn't have that planned. With healthcare, you have Medicare, and it's going to give Medicare more power to negotiate drug prices for seniors in the future. It's also going to extend the ACA, Obamacare, 3-year extension of the subsidies that were supposed to expire at the end of this year. It's going to cap the insulin prices for seniors at $35 a month. It does not do it for the private sector. That could not get through. And then you get a 15% minimum tax on large corporations. So let's go through some of the winners here. And there's other stuff going on too, smaller stuff, but let's go through some of the winners and losers. So winners, the ultra wealthy, the 1%. No new wealth tax coming out. So that's good for them. EVs, electric vehicles, they have a tax credit of up to $7,500. But it has to be a new car. It can only be up to $55,000 car. Pickups can only be up to $80,000. And there's a cutoff with your adjusted gross income. So if you make more money, I can't remember the number was, over a certain amount, you will not have access to that. So it's going to be, again, for the middle class. Private equity, the carried interest tax break, which is very, very big for private equity, was not removed. So again, if you want to go after the ultra wealthy, this is what you do. You don't get IRS agents to go after the average American. And that's what they're doing. Complete BS. I don't care what the government tells you. Obviously, clean energy, solar, hydrogen, fuel cells, wind, you name it. Nuclear, $30 billion production tax credit for nuclear power producers. That's really important. It also extends and increases some tax credits for wind and solar. So now homeowners can claim the 30% of the value of the project as a credit if they're putting on solar or wind into their home. It could take up to $6,000 off the cost of a system, which costs around $15,000 to $20,000. So that's pretty big to incentive for people to install solar, let's say, in their home. You know, one of the big areas that actually applauded this, believe it or not, was traditional oil and gas. Because the mandate is for more federal oil and gas lease sales, so more land sales. So that's actually really good for the energy sector. The very dirty, if you will, to the climate change people, dirty oil and gas. It boosts existing tax credit for carbon captures. Who do you think makes out on there? The big oil and gas companies. And then there's also in there a tax credit for hydrogen production. And, you know, if you saw after this came out on Sunday, I saw some, I wanted to see other comments from different politicians, different think tanks, different companies. You know, the big oil and gas companies actually came out and praised this, believe it or not. I talked about healthcare, the Medicare and Obama enrollees, their yearly prescription for seniors is going to be capped at $2,000. They'll be able to negotiate prices, I mentioned, on 10 drugs 4 years from now. And the premiums will not go up on ACA. I misspoke that first one. Yearly prescriptions for seniors cannot go above $2,000 for their drug prescriptions. And then again, the IRS will get over $80 billion over 10 years, equaling more audits on the middle class. Losers, big drug companies to me, because obviously if they're going to be negotiating some of those prices, so that's really not going to be good for them. The good news is it's just for Medicare and it has not affected the private sector. So that is something that will be real. And it may end up actually hurting again the middle class people, because what may happen is the drug companies may say we're not going to lose that on profit, be that what it may. So they may raise prices on the private aspect of their drugs, and then thus hurting normal people. Big tech could be hurt by these new corporate tax laws, which is a 15% corporate tax minimum annually. So some of the tech companies pay less than that now with some good accounting. So that might hurt them. And then, of course, the far lefties, the Bernie Sanders and crew. When Biden's presidency started, this is, and you look at some numbers, I think it's around 730 billion. They wanted $6 trillion of this junk going through. So that obviously didn't happen, thank goodness, because we are in enough debt already. We don't need $6 more trillion sloshing around because that would actually increase inflation dramatically, in my opinion. So those were some of the losers. Now, before I get into my favorite investment part that I found in here, let's dive in a little bit more to a bit of the clean energy part of this bill, because this leads into the sector that I like. According to the International Energy Association, the annual clean energy investment globally, it must reach $4 trillion annually by 2030 to meet the goals that they're looking for 2050, because that means it's going to have to go start at $4 trillion in 2030, increase for next 20 years after that. So it gives you an idea of how much money we need. So we're not even close to that right now. Some other stats I thought were pretty interesting. You know that wind turbines right now produce more power in the U.S. than the entire nation needed in 1950. It's weird because you don't see many wind turbines. You go to Europe, you see wind turbines everywhere. So you're seeing some progress in clean energy. Electric vehicle sales this past year, 5% of new car sales. And when other countries have hit this level, other European countries and some Asian countries, when it hits five, it typically hits 25% within 4 years. So that tells me there's a big, big investment opportunity in electric vehicles, in the sensors and everything that goes into that, the electronics, into the battery technology behind that, the battery materials that are behind that as well. So in 2020, renewables made up 29% of all the energy produced, up from 20% in 2010. So it hasn't really increased that much, really. I mean, yeah, it's 48%, but it hasn't. I think it thought it'd be a little bit more, honestly, or 45%. Sorry. By the end, though, of the roaring 2020s, by the end of this decade, renewables should account for about 60% of power generation in Europe, up from 35 today, 38% in the U.S., up from, as I just mentioned, 29% today. China, up from 23 to 30%. And this is according to S&P Global Commodity Insights. And I got to tell you, those aren't huge enough. I mean, they're still, that's because there's so much money has to be put into this. So yeah, to me, there's a lot more that needs to be done. And the more I look at this, I'm convinced that this is a very long-term investment opportunity. Not that I didn't think that before, but I'm definitely 100% behind that now. The other thing it tells me, and I'm not going to get into this show, but I want to talk about it probably next week, is that there is a place for oil and gas companies in your portfolio, because we cannot transition nearly as fast as I may have thought or anybody else may have thought. And that means there's going to be a huge need as the economies continue to grow around the world, as population continues to grow, as the middle class continues to grow. There's going to be more demand for energy, which means that we need to have something to power that. And that's going to be dirty. It's going to be nuclear, maybe hydrogen. We'll see. But there's going to be a lot of oil and gas, and that's not stopping anytime soon. One more or two more areas, and one of them is going to be my favorite investment here, is battery storage. There's going to be a tax credit for people that buy backup systems. So you can either back up, your solar and everything, or completely off the grid. And it's going to be a bigger credit if you use U.S. manufacturers. So battery storage has always been one of my favorite investment opportunities, and you can see here why. You're going to start seeing some big money continue to flow into there. Now, the last area within the bill that I've decided to highlight is hydrogen. And I've talked about hydrogen, I think, a couple months ago. I don't know how deep I got into it. But there's going to be subsidies up to $3 per kilogram for green hydrogen, which I'll explain in a moment. And that's more than half the cost of producing it. So think about that. If you could produce something for, let's say, $5.50 per kilogram, and somebody's going to give you a subsidy of $3, boy, your margins go through the roof. You become profitable pretty damn quick. So that to me caught my eye. And to me, that is something that we cannot ignore. And I've had hydrogen on my list for a long time, so I was able to dive into that and pull up some articles I've had and some stats. So let me talk about this here a bit and explain to you really what green hydrogen is versus other ways to produce hydrogen. So looking to the future, there's really two ways for hydrogen production. One is called blue hydrogen, and that's hydrogen that's produced using natural gas. And obviously we know natural gas is a fossil fuel, creates emissions. However, in blue hydrogen, those CO2 emissions are captured and stored. So it essentially shouldn't be, causing any more emissions into the atmosphere because they're capturing and storing those. Well, that's not as big of an investment opportunity in my mind. I think people more are going towards what's called green hydrogen. And the way they do that, there is a process that they split water into hydrogen and oxygen. It's called electrolysis. And the key here is that electrolysis is powered by renewable energy. So there's no emissions at all. So this is purely a clean source of power. So that's why people are looking at green energy. Goldman Sachs came out not too long ago, and they believe it's going to be that hydrogen will be a $1 trillion market as it takes the place of natural gas. And they believe it's the only path to net zero emissions. And I have to agree to some extent, because we can't get to this 2050 goal without including hydrogen, without including nuclear power and expanding it, both of them dramatically. It can be used in a variety of industries too. It can be used, to create heat, electricity. It can be used for transportation. It can be used for heavy industry. So it's not just your typical, let's just create energy. It could be used in a lot of different industries. Goldman Sachs also believes it can make up 15% of the global energy markets. Again, that's over $1 trillion annually. Today, the market's $125 billion, give or take. In the next couple of decades, it could hit $1 trillion, giving it obviously an 8x upside if it does that. So the European Commission, obviously over in Europe, plans to install 40 gigawatts of green hydrogen capacity by 2030. Hyundai Motor is starting to export some of its, it's called Exient fuel cell trucks to Germany that are run on hydrogen. So you're starting to see more and more. If you just Google hydrogen, hydrogen power, or green hydrogen, you'll see every day more news coming up, and you're starting to see a big expansion of that. So let's jump into some of the stocks. Actually, let's take a look first here at some of the ETFs, and we'll take a look at that first. So I'm going to pull up a chart here of these ETFs and give you an idea of what I'm looking at. There's really two big hydrogen ETFs out there, and let's take a look at two of them. And this is going back here over the last year, and you can see I put it up against the S&P 500. The hydrogen ETFs have underperformed. That orange line there, you can see the S&P 500 ETF SPY down about 5.2%. The direction hydrogen ETF, symbol HJEN, down around 18.5%. And then the global X hydrogen ETF, symbol HYDR, down over 34%. So greatly lagging the market over the last 12 months here. Again, it's a very short time frame, but lagging the market when you start to see a lot of these investments coming into some of these renewable energies and some of the, hydrogen could be somewhat a bit of a traditional, if you want to call it too, energy sources, and it's been lagging. So I see a bit of an opportunity. One thing I do see is it is coming up with the overall market. They've all bottomed here in June and starting to turn around. All right, so that's kind of where we stand right now with performance over the last year. And the difference is you've seen, between HYDR and HJEN, some really wonky symbols, is the makeup of it. And that's why you always have to look. You can't just buy an ETF if it has the name hydrogen in it, because they could have completely different holdings. And you're not buying the name, you're buying the stocks that make up the ETF. So the Global X Hydrogen ETF, which is HYDR, small ETF, only has $35 million of assets under management. Some of its top holdings are Bloom Energy, symbol BE, Nel, which is a European company, symbol NLLSF, Plug Power, symbol Plug, Ballard Power, BLDP. And then you look at the Direction Hydrogen ETF, HJEN. It's even smaller at $28 million of assets under management. It's got Plug in it, top one. It's got Bloom Energy, Ballard Power. It's got Air Liquide, which I'm going to talk about, Linde, Fuel Cell. So it's a little bit different. It has some overlap, but a little bit different. And again, you can see that HYDR, which is the first one I talked about, has underperformed, where the Direction Hydrogen has done a little bit better. So let's take a look here at some of the individual stocks. And these are ones that I just mentioned. There are a lot of them are in the top of the list here. So first one we're going to take a look at is Plug Power. This was a big favorite back in the day when the fuel cell stocks were rocking and rolling. Plug Power, symbols Plug, PLUG. You can see here in the chart, it's been in a downtrend since it topped out in November, like a lot of other stocks in the market, especially high growth stocks, perceived risky stocks. You can see it's come down here, lower highs, lower lows. Let me zoom out here, though, because I think it's important to show you kind of where this has been. And you can see when this went public back in 99, around $200, it ran up to over $1,500, split adjusted here. It's come all the way down. So hydrogen fuel cells were so big, they didn't take off. But I do think this could be their second heyday. So taking a look at Plug, it's about a $15 billion company. It's an end-to-end green energy company. It's got 5 plants right now that are operating in the U.S. To give you an idea of the growth here, again, mentioned $15 billion company, but last year it did $502 million in revenue. This year, looking for 914. That's really, really good growth. Obviously about, 42% or so. And then 2024, the estimate's over $2 billion. So you can see the big increase from 2021 to 2024. It's 3 years, 4x increase on top line. losing money, but it's expected to make its first profit in 2024. So even though it's a larger company, it's not very tiny. It's still 15 billion mid cap, but it's not a real tiny company. It has a path to profitability in the next 2 years if it hits its number. So this is very interesting company to put on your watch list. The next two actually are pretty big companies. One is Air Liquide, which is AIQUY, trades here over the counter as an ADR in the United States. It's a European company. You see in a chart here, it took a big hit in June. It was kind of just going sideways, holding its own, and took a big hit, fell down to a yearly low. If we zoom out here, you can see a little bit more of the chart, and it's still holding above the levels it hit in 2020, a low from COVID. So that's good, but it did take a hit and it's been consolidating. So AIQUY, which is Air Liquide, as I mentioned, it's a European company, about a $71 billion market cap. Top line growth revenue is kind of slow. I mean, hydrogen is a big portion of the company, but it deals with gas, all types of gases all over the world, huge global company. Valuations aren't bad. It's got a PE ratio of about 20, price of sales of 2.4, but it's aiming to triple its hydrogen related revenue by 2035. So in the next 13 years, looking to triple it up to $7 billion annually. So it is putting a lot of resources into it. And this is kind of a more conservative way, even though the chart with that big sell-off, you wouldn't think that. It's definitely a more conservative way to play hydrogen. And one of the stocks that I really do like, and I think in this pullback here, really, really nice looking. The next one is Linde. Linde is the name of it. Symbol is LIN. You can see here on this chart, choppy, kind of going sideways. I could zoom out a little bit to give you a bigger idea of what's been going on. Great long-term chart, a little bit nicer than AIQY. Also a very big company. Linde is a $150 billion company. They did sales of $30 billion in 2020, up to 36.5 in 2024. So again, not huge top line growth for these large companies, but it's got nice bottom line growth. Last year it earned $10.59 a share, up to $14.43 in 2024 is the estimate. So it's pretty big growth, about 35% or so growth. PE ratio 23, price of sales 4.3. Nothing to really jump around about, but not overly expensive either. So with Linde, this is, again, a big chemical and gas company. It's a way to play hydrogen where it's a portion of the business, not a huge portion, but it's a portion. And they're involved in a lot of other gases that are involved in a lot of other industries and trends. So again, one to keep an eye on if you're looking for a larger cap. And then the last one here is a smaller company, and this is Bloom Energy, and the symbol is BE. You can see it's not a nice run here as of late, more than doubled from its low in May, up against resistance at this 27 level. Very similar chart that we've seen to the S&P with this kind of double top going on right now, trading around $25 today. Bloom Energy, a little bit smaller, about a $4.4 billion company. They make fuel cells for on-site power generation. And they're on the path to be profitable for the first time next year. So that's huge. Sales last year, 972 million by 2023. So next year, 1.49 million. So you're looking over 50% growth top line in a matter of 2 years. That's pretty nice. Price of sales 3.0. There's no PE yet because it's not making any money. But again, the path to profitability to 2024. So when you look at this, it's pretty much, this is a pure play when it comes to hydrogen. So this is one that I think is a little more risky, but it also has much more upside, in my opinion, especially being in that smaller mid-cap range, about $4.4 billion. So those are definitely four that you want to put on your watch list. The ETFs, I threw those out there for you so they know that they're out there. But as many of you know, not a big fan of the ETFs because I think you can maybe build your own basket here. If you want to do hydrogen, maybe do 4, 5, 6 stocks. A lot of ways to play it because you could play the gas companies I mentioned, like Air Liquide or Linde. You could look at more of the fuel cell, like Plug or Ballard Power. You could look at really kind of the pure plays like Bloom Energy. You can look at some of the companies that build the infrastructure, some of the architects that do that in engineering, a lot of different ways. So I think you want to pick and choose a little bit. But again, I don't like the way that the ETFs are set up, the two that are out there. They both have very low assets under management. If they stay there, they probably won't be around that long either. So that's something that I would kind of shy away from now. Look to build your own basket. There's really good chance that my team and I are going to keep doing a deep dive on hydrogen and most likely put a hydrogen portfolio in one of our newsletters. So again, you want to keep up to date when we do that. If you're a member, if you're not a member, you want to make sure you become a member and join for as little as $49 a year for the McCall report. And We're always putting out new stock ideas every month. We have a bunch more coming out in a couple of weeks. So I'm excited for that. So if you're not yet a member, please check it out. And if the least, sign up for the free daily email. Every day the market's open, we put out an email for you breaking down the markets and what's going on. And more importantly, what it means for you and your investments. But folks, once again, thank you so much for the support. Thank you so much for the last interview. So many people watching it, sharing comments. We really, really appreciate it, both Jim Rogers and I. So thank you so much. Have a great Tuesday. We'll be back Thursday with another great interview. This is a gentleman who is all into innovation and one of the big proponents of Bitcoin. So you'd like to turn into that, find out what his thoughts are right now on Bitcoin and cryptocurrencies. I'm Matt McCall, and that was Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.